The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Jeremy Hook from TMS Capital. If you ever doubted this was live TV, you've seen it here today. We've got an eager panel waiting to go to hear all your questions about shares. So please give us a call, 1300 30 34 35. Let me introduce the panel tonight. On my left, joining me here is Les Sansa from Paradigm Securities and Michael Kodari from Kodari Securities. So good evening to both of these gentlemen.
Evening.
We've had another good day, gentlemen, and the market is certainly alive as the 2014-15 financial year has got underway, about 100 points this week, so it's been good. Some mixed messages from our Reserve Bank Governor telling us that maybe we shouldn't listen to him, and then as soon as he utters we do. We've had retail sales being a little bit disappointing and building approvals really very strong. So, Les, what do you make of the market? You're bullish?
Absolutely.
Good.
Absolutely.
And Michael, are you bullish?
I'm bullish too, yeah. We've been buying all week.
Yeah, good. Okay. You're responsible. That's good. So, Les, just what should investors be looking out for now? What are the key things to drive investment returns now at the start of the year?
I know probably a lot of people may disagree with me, but because the mining sector, which is something that at Paradigm we seem to specialise in mainly, has been so beaten down for so long, and it is such low, ridiculous prices, we believe that it's about ready to start rebounding in a very, very big way. In fact, at Paradigm Securities, what we have is what we call our Super 20. Right. 20 stocks we think people should be in various different categories of commodities, and we're more than happy to pass those on to people that want to get in touch with the station. I can send it off to them tomorrow or whenever. So to us, obviously, you know, when the market's going well, everything goes well. It's easy to make money because everything's going up. But where the big money is, and I'll give you a classic example if I have a second, is that, you know, everyone talks about, you know, you've got to go with the banks because they're safe, you've got to go with Telstra because it's safe. And if you want dividends and regular income, that's fine. But around about October, November last year, we started recommending a stock called Lambu, LMB, at 6 cents. If you had to put $10,000 into Lambu at 6 cents, right now that would be worth about 150 grand. Right, it's in trading hold at the moment, but it closed in the 90s, and we think when it opens, it potentially could be opening at a heck of a lot more. Yeah. My point is, I have no issue with people wanting to trade in the safe, you know, blue chip stocks, but you don't get those kind of increases in those kind of stocks. If you're looking with small money to make big money, $10,000 doesn't buy you very many Rio Tinto, BHP or whatever. It doesn't mean it's a bad trade, but I'm saying if you ask me what's moving, and a few weeks ago I recommended LNG at 53 cents. It's currently $2.30, so 10 grand in that would be worth over 40 grand. Now, it doesn't happen with every stock, but you don't get those kind of moves in the safe stock. So if you have a little bit of risk appetite, and you get into some of these Super 20 that we've got, you have the potential, I think, to make a lot of money. Yeah,
good, Les. That's great. Michael, more at the big end, or are you finding some of these, you know, pretty special opportunities when you're really digging around in other parts of the market as well?
Look, I think, Les, when the market's going up, when we go through a bull run, the small cap companies rise in share price, and you see a lot of growth coming from them. We've seen the blue chips do very well in the past year and a half, and you know, I think for us it's more towards the I guess the top 300 mid caps. So you know, you still take a bit of risk, but the risk is more minimal, and obviously the reward isn't as much. But you know, our biggest buy has been Domino's Pizza throughout the year, and that stock from last month, it's up about 12%. So if you're looking to consistently make money,
looks like you were slicing the pizza then, mate.
he gets 20 pizzas delivered every week from Domino's. Every week they send him 20 pizzas.
We keep eating pizzas and buying shares. That's all we've been doing.
Well, a lot of people are obviously buying the pizzas as well.
No, it's a good company. It's a
yeah,
very
well,
good
I mean,
company.
it's got a very high
Smart
return on
operators.
equity. They've moved into Japan successfully, and you know, they know what they're doing. They know their business very
Very
well.
smart operator.
For us, Jeremy, it's about funding companies that have good cash flow, low debt, high return on equity, good management team, a good business model. So
And it's
that's
not-
what we look for.
And again, it takes a bit of work to do that, and finding
right.
stocks like that and sticking with them. We're going to go right to an email. So we've got an email from Addy that's come in on to yourmoney@skynews.com.au, and the question is from Addy: can I have your opinion on the coal sector in general, and on New Hope Corporation? The code is NHC in particular. I currently hold this stock in my self-managed super fund, and the price seems to be declining, which is very true. So what can we tell Addy? New Hope Corporation, Michael, is it one that you're familiar with?
Look, it's one that doesn't come through our filters. It's a smaller company, so you know, I see that there's more opportunities in the market than looking at those sort of stocks. So it's not one that comes in our filters, but you know, if she's looking to buy into it, if she's holding more, it all depends on her risk appetite and the reward ratio. So risk and reward go hand in hand in the market.
And coal is the other part of the question more broadly that Addy's asking. Is there anything in that sector that looks interesting to you?
Look, my opinion is in that sector, a lot of these companies are undervalued, right? And the macroeconomic factors, you know, China's growth slowing down has had a big impact on the mining and mining services sector. Now, one can say, well, that's the best time to get in and buy these stocks, so they're undervalued. But you know, for us, we quite actively trade on a monthly basis, and we look at sectors that are you know, pretty much up on the demand side. So we've stepped away from mining and mining services. But having said that, it doesn't mean that, you know, in your portfolio you shouldn't hold any stocks, but it's harder to pick the good ones in that sector. So, you know, in a way, it's like you're swimming against the wave. If you're not careful, you know, you can drown. So, you know, you've got to get the right advice when you're looking to invest in those sectors.
Yeah, good one. And with
That's why people need our super top 20.
There you go.
Because
Where's the super top 20?
we have swum through the sharks and found them for you.
And there are coal stocks in that top 20?
I think, yeah, Whitehaven Coal.
There you go.
Whitehaven
Okay,
Coal.
so
But just a quick word on coal. Look, it is bashed and crashed and everyone hates the bloody stuff, but China still uses nearly 70% of it to generate energy.
Yes.
And the International Energy Agency, who report on all things and monitor all things energy, have said that by the year 2017, coal will just about have overtaken oil as the #1 provider of energy, right? So I mean, when I hear that, I think, well, sooner or later, it has to... It's not... People say it's dying. I don't think it's dying. I think it's going through a lull.
Yeah.
But if it's going to be that... If people hate it, but you still got to keep using the stuff because there's so much of it and it's easy to get to, then I don't think it's dead. And I'm not sure how the company that New Hope, that the lady's invested in, how that's going to go. But I still think there is light at the end of the tunnel for coal until, you know, they do allow fracking of natural gas and et cetera, et cetera. And at the moment, with all those things going on, coal just keeps chugging away in the background. Yes. It's just like iron ore at the moment. It's going through a bit of a lull in price, but not in usage.
Yes.
Not in usage.
Well made, Les. And just my point on that, Addy, New Hope's got a lot of cash on the balance sheet. It owns infrastructure at the Port of Brisbane. It's been a very successful investor in the past. It hasn't done well in share price terms lately, but not a lot is expected. As controlled by the Washington H. Soul Pattinson Group, it's a very good kind of company in this space. But it's time for us to take a break. In the meantime, the phone lines are open, so please give us a call on 1300 30 34 35, and we'll be back shortly. Welcome back to the shares edition of Your Money, Your Call. We're still taking your calls on 1300 30 34 35, and your emails can come through at yourmoney@skynews.com.au. I'm Jeremy Hook from TMS Capital, and with me tonight is Les Sansa from Paradigm Securities and Michael Kodari from Kodari Securities. So we've got our next caller on the line. It's Mark. Good evening, Mark from Butterham.
Oh, good evening. Thanks very much for taking my call. Got a few questions for you. A couple of little ones and a big one. First two, one's about Panoramic Resources. I've been on that for a while, riding it from about 30 cents up to about 85. Used to be at about $6. I'm just wondering if anyone knows about it and how far it might go. And then second one, TNG. Had it for a while from about 9 cents. It's about 18 cents, and that used to be about $1, so that's pretty good. And does anyone know what's happening with Leighton? Because it's going up again, and there's a that someone's trying to buy it. Is that correct?
Yep, no, thank you very much. They certainly are. HOCTF, who has been on the register for a long, long time, is creeping up and having quite an impact at board level and operation. We might go to your first two questions first, and I'll go to Michael. Panoramic, number one. How do you feel about that, if you have a view?
Yeah, one of the key things with Panoramic is cash flows declined over the past year, and so has return on equity. So, you know, a lot of these companies, if they don't have cash flow, they're not going to do well. So cash flow is a big part of any business, and you know, capital raisings in the past have been very hard to do, and you know, it's something that's not very positive from my end. So I think it's had a very good, you know, it's had a good run, and you know, it wouldn't be a stock that I'll be buying.
Okay.
And TNG again, you know, return on equities dropped to around 3%. So you want to invest in a business that's getting more than what the bank's paying you.
Yes.
And so 3% is very low. A lot of these stocks, technically, they can trade very well, but long term, fundamentally, you know, has a big impact upon the way they're going. So, you know, these are two companies that I would not be buying at this stage. Okay,
thanks for that, Michael. I might go to Les and come back to you for Leighton in a moment. Les, charts aren't coming up tonight, a technical thing there, but is there something you can tell the viewers about Panoramic or TNG?
I don't really follow them. I could probably talk a little bit at Leighton as you can.
Yeah,
I know that recently there was an offer to, because one of my number of my clients are in Leighton. We don't just do mining stocks. We have plenty of people doing portfolio stuff as well. A lot of our clients do portfolio stuff, and they were being offered $22.50. I think it was 3 for 8 or something like that. And we suggested to our client that she'd take it because it was about $19 something at the time, $19.50 or something. But I noticed in the last few days it's gone well over $20. I'm not. Yeah. You probably know better than I why the reason is.
Look, I mean, there is no particular reason at the moment. I mean, the opportunity for the partial bid by HOCTF was a good opportunity at a premium price. Now, HOCTF is tightening its control of the board, and it's operational. It's making a lot of cost-cutting exercises which have appealed to some part of the market. But we think it's fully valued at $22.50.
Absolutely.
That was a good opportunity to get out. Now, having said that, we are going to go through another infrastructure boom which will benefit Leighton, which is almost invested in every part of the construction and building industry in Australia. It actually tenders against itself, you know, in most big operations. So it will get a large slice of the action there. And I think the market being a bit more positive generally has helped Leighton overall. Is it one that you're buying though, Michael?
Leighton, no. I haven't liked Leighton in the past. I mean, it's had a good run in price, but it's not that we're buying. Our portfolio of stocks are about 6 that we're restructuring people's portfolios with. And these 6 are in your top 300, but they've got to go through a criteria. Leighton really doesn't fall through it. So, you know, I think Leighton's had a great run. So, you know, I think if anyone's holding it, maybe now's a good time to exit.
$22.50 was a damn good price.
Yeah, it was, and you didn't expect the price to stay around that level. No. It didn't. It's actually, it was sold down and improved somewhat. But I think for me, one of those things is that's HOCTF have controlled that company through thick and thin. And to me, Leighton is a stock I wouldn't want to own for 10 years. I've found that in the past it's worth investing in it for a year or 2 or 3 and being out of it for a number of years as well. And right at the moment, it's had a good run. I don't think you want to be paying this sort of price right at the moment.
It's fully priced.
Yeah, so I think moving on is the way to go. Mark, sorry we didn't have a lot of appeal for any of the stocks that you had highlighted to us. But I guess having touched on some of the smaller ones there, Les, I mean, with Mark's call there, can you talk us through one of your more preferred smaller cap resource stocks?
Yep, I could talk you through quite a few. Well, in the gold sector, we like Blackham Resources. The price is mucking around between 20 and 22 cents, but you know they have this Wiluna mine and this Wiluna mill, so they picked up this mill for their gold projects. They've got about 3 gold projects in a row, and they picked up this mill for about $2 million, and the replacement value, it's a permitted mill, like it's all ready to rock and roll. The replacement value is like $150 million, and they've got about 4 million ounces of potential, a little bit more actually, of potential gold in the ground. Now, the whole deal was about $4.5 million to pick up the actual mine and the mill, and they paid $2 million up front and a couple of million down the track. Those sort of deals, I mean, I go to sleep and dream about. I mean,
yeah, that's right.
You know, all the gold's there, the mill's there, they've done it really, really cheaply. So there's just, I mean, we've got, like I said, in our top 20, and we could probably have another 50 after that. But that's just one example. It's not just saying, oh, here's a gold mine, it's a great idea. You look at what they've got, what they've paid for what they've got, what the value of what they've got is, and the potential of what they're going to bring out of the ground.
Yeah.
And there's one classic example, which is still around about 21 cents, give or take a cent.
And I think, Les, I mean, the interesting thing from a viewer's perspective, they see that a lot of small resources have been very disappointing price-wise. But that, in fact, when you're getting quite exciting.
Yeah.
But that becomes excitement for somebody who's able to discover value and take advantage, correct?
Exactly,
Yeah.
exactly.
Okay, excellent. We're going to go to a break in just a moment, but we're still waiting for more calls from you or more emails. So 1300 30 34 35 is the phone number, the email address, yourmoney@skynews.com.au. Back with more calls very shortly. Welcome back to the program. On a good day for the share market with plenty of your questions, it'll be a great show. 1300 30 34 35 if you'd like to ask the panel's opinion, or emailing us on yourmoney@skynews.com.au. Our next caller's on the line. It's John from Mandurah. Good evening, John.
Yeah, how are you? Look, just a couple of points. I just wanted to know what the boys thought about Rock Oil. I think Rock Energy, they've been around 40-odd cents, mid-40s. They've just been creeping up a bit. I just wanted to know what they thought about that. And just on that previous explanation about that gold mining company, Maluna, just a couple of points that may have been left out. What's it going to cost them to get that gold out of the ground per ounce, and have they got the money in the tank to go from explorer to producer?
Yeah, very good questions, John. We'll get to those. Thank you for your call. And we'll go right to Rock Oil. And I think, Michael, you can probably tell us a little bit about Rock.
Yeah, look, Rock Oil, it's had a very good run. Look, it's one of those interesting companies. I think, you know, it's trading on valuation, probably about 60 cents. But, you know, it's one of those things, you know, it's a company that's had a good run. It's around valuation. Should you buy more or sell? You know, at this stage, I'll probably sort of watch the company rather than buy anymore. So that's where my sort of stance on Rock Oil is at this stage. Yeah.
Les, has Rock come across your filters at all?
No, not really.
Okay, no, so we don't.
And I can't see a chart, so we won't.
Yeah, we won't comment on that. Yeah. But John raised an interesting point there, just about
good questions.
And we didn't give you 10 minutes to talk about the stock, but questions of interest. How much cash has it got, and what's the cash operating cost?
I'm not quite sure the exact cash cost. I think the production cost is going to be between $900 and $1,000, but I can confirm that if anyone wants to contact me tomorrow. But and will they require more cash, which was the other question? And the answer is absolutely yes, they will.
They will.
But like most companies that get get cash, we raise capital for them on a regular basis. But and they will require more cash, and they'll get the more cash because they actually have got a lot of gold in the ground, and they're ready to start producing very, very soon. So good questions. I believe it's between 900 and 1,000. I will confirm that if you want to contact me tomorrow. And yes, they definitely will need more money, as most small companies do when they get themselves. But once they're actually, you know, producing, then they'll be cash flow positive. They won't need to be borrowing any more money.
And that's a reasonable cash operating cost in the industry.
Absolutely.
That's you know, certainly
par for the course.
Make good money in that sort of rate.
Yeah.
So that's good. Thanks for your call, John. Our next caller's on the line, Stephanie from Broken Hill. Good evening, Stephanie.
Hi, Jeremy. How are you? You've got a great panel there. Thank you.
Thank you.
Yeah, I've got sort of two, but one is that Michael, as you know, his alternative recommendation consistently to Domino's is always TPG.
Yes.
It's on a big pullback at the moment, Michael, and I'm just wondering what your thoughts are on that, whether you have any concerns. And I know, Les, you haven't got any charts, but maybe either of you and Jeremy yourself, ERM Power,
sure.
Ticker code EPW, if there's any sort of thoughts on that if you have time.
Yeah,
thanks very much. Appreciate everything.
You're welcome, Stephanie, and thanks for those two very good stocks to be talking about. Two that have pulled back a bit, and Michael, TPG, still very much like it, I'm sure.
Yeah, look, I like TPG. It's sort of in terms of it's not as trading as strongly, but it's a stock that it outperforms any of its competitors. So it's a great company. I think there's been a lot of sort of news about the company lately, which has caused a bit of a negative sentiment. But it's a company that keeps outperforming. Yeah. I mean, I've recommended TPG. One of the key things with me is I recommend the stock and just stick by it month after month. And, you know, if it goes up 120% in a year, I'm happy.
Yes.
You should be.
Reasonably happy.
Yeah, reasonably happy. So TPG did that. And, you know, this year it was Domino's Pizza.
Yes.
And Domino's, again, a good business. You know, I invest in businesses I understand. So if I understand a business and I see that it's got great financials, I know the management runs it very well, you know, we could be trading that stock every month. And for us, you know, these are companies you're buying into.
So a pullback, you still like it. It hasn't fundamentally changed. Buying opportunity. Yeah. I mean, this is a company with one of the best telco executives, David Teo.
That's right.
A very good return on equity, a solid register, growth. It's had acquisitions, organic growth, and there's greater opportunity ahead for them. So
that's right.
And it's not hated like Telstra.
Yeah. No, well, that's right.
I don't mean as a trade, but as a company. For some reason, people have a thing about Telstra. They don't have that about TPG.
Is TPG of interest to you, Les?
I don't own it.
Yep.
I'm more into the small mining stocks. I tend to do options on the bigger companies because I'm an options trader. But I've heard Michael talk about it, and I also have said that, and we've had charts up, and I've said I think it's a good company too, because it's not a company here. You get the odd bit of bad publicity, but you do that about phone companies all the time. But it's actually a very strong company. It just recently got an acquisition. I think it's now about the second biggest. Isn't it one of the biggest?
It's the second largest.
Yeah, second largest in the country.
By market,
and if my theory is this, if you like a company and it goes down in price, but you still like the company, then to me that's a buying opportunity. I mean, I'd rather buy something when it was low than when it was high. And the problem is most people, which is why a lot of people don't make money, is they buy at the top and then when it starts going down, sell at the bottom. You've got to try and reverse that. And if you have confidence in the company and it has all the things that Michael said, and it goes down in price, well, there's an opportunity to buy it.
That's right, that's right.
And these things do move in sectoral waves, don't they? You see a wave of selling across telco stocks, no particular reason, people are getting out, often taking profits, and that may be what we end up describing this little weakness.
That's exactly what's happened with TPG. There's a stock that we've been buying very heavily, and it's done really well, 15% over the past 2 days. It's called VOC Vocus.
Yes.
That's another quality company.
An acquisition yesterday?
That's right, yeah. So that's a good quality stock too. So, I mean, yes, we come out on, you know, Sky and say, buy this company, but if we mention a company 3 months ago, it doesn't mean that you're still holding the stock. So we might be buying and selling, but long-term TPG is a great stock, but over the past month we've been buying Vocus very heavily, and Domino's Pizza.
And money going into Vocus can take money away from a stock like TPG.
Absolutely.
Stephanie, we're going to come back after a short break and discuss ERM Power, but we do have to go to a break, so we'll leave the show for here. 1300 30 34 35 is the number. We look forward to more of your calls. Welcome back to the program. I'm Jeremy Hook from TMS Capital, and joining me on the panel tonight is Les Sansa from Paradigm Securities and Michael Kodari from Kodari Securities. Tonight it's all about shares, so if you have a question for our panel, please give us a call on 1300 30 34 35 or via email yourmoney@skynews.com.au. Before the break, we had a question from Stephanie. We were able to answer one of hers, and we missed the other one, which was ERM Power, which is an interesting kind of utility, not mentioned in the same breath as the larger utility companies in the Australian market, but one which has declined in share price recently. It trades around $1.80. We value it around $2.40. It pays a very good dividend, in fact. It doesn't have a high return on equity like a lot in its space, but it is one that you could be looking to add to or accumulate. It's not a heavily weighted stock for any of our portfolios, but it is of interest at this level, Stephanie, and I think it is one that is very investable at $1.80. So price being an important consideration, I think it's one that you can be looking at, and the code is EPW. We've got a caller on the line. It's Michaela. Good evening to you, Michaela.
Hi, how are you?
Okay, very well, thanks, Michaela.
That's good. My question's about a company called Rhinomed. My husband is a cyclist and he uses one of their products called a turbine, which he loves.
Okay.
So we're just considering investing, and we're just wanting to know a bit more about the company.
Yeah, great. Well, thanks for your call, Michaela. We'll go to Les. Les, I mean, obviously, something you use and something...
I do.
If you use it, there you go. And you invest in it?
Yes, I'm investing in it. I think this is a fantastic little company. They've developed a device that fits in your schnoz very comfortably, very small, very unobtrusive device, not a big heavy thing like those mouthguard things that they have. And it allows the wearer to achieve approximately 38% increase in oxygen intake, which is why the cyclists love it. 38%. All sports people want to get more oxygen into their lungs. So if you think of cycling, running, rowing, walking, climbing, whatever. And the beauty of this product is it's very cheap. You can buy a packet of 3 for about $25. And because it's on the internet, forget Australia, that's a tiny little market. Think about all the professional cyclists all over the world, but not only professionals, just casual people who do it for fun. They all want to run faster, walk better, row better, ride better. It's just got so much incredible, phenomenal potential because it's so cheap and it's already in production. And I was thinking about it, because I did buy some for sleeping actually, and they are developing another device for sleep apnea. Again, another massive market. But I use it for that, although they promised me that the one that for sleep apnea will actually be a better product.
So they're building a different product.
Yeah, it'll be a different product. But this does open up your nostrils, so it helps you sleep better at night time, and it certainly does do that. But I was thinking about it, the other night as I shoved it up my nose, and I thought, it's not just people who are professional sports people. What about people who have respiratory problems and want more oxygen in their lungs? Or older people who can't walk too far or jog too far because they run out of breath? Anything that gives you more oxygen gives you better performance. So that, coupled with the fact that they're doing the sleep apnea one, coupled with the fact that it's available now, it's on the market, it's very, very cheap, and there are millions of people in the world who could use either or both of those products. And the thing is trading for about 2.5 cents. So, Michaela, if your husband uses it and obviously loves it, and you think about investing in it, I think that's a great idea. I think it's a great investment for that price, because we have a short-term target on it at Paradigm of 12 to 15 cents, short to medium term, and long term, the sky's the limit, because the more people use it, the more people are going to use it, because people like Michaela's husband are going to tell their mates what a great idea. And it's a really nifty little, unobtrusive, not uncomfortable product.
And would I be right in saying they're not profitable yet?
I don't know what the profit... I haven't checked the profit... I think they'd be pretty close, because it's on the market and it's now selling. But where the money is being ploughed back into is the development of the sleep apnea one, which they're about to start trials very soon. And these things don't have, phase 1, phase 2, phase 3. They're little devices.
It's not invasive,
No, they get into commercialisation very, very quickly.
Yeah, excellent. Okay. Anything to add on that one, Michael?
No, I want to buy some.
You want one? You
I don't play much sport at the moment, but I got to breathe too. So
you might need.
I need bigger lungs.
You might if you get.
But I really think that anyone, because when it's in your nose, you can hardly see it, right?
Yeah.
I think that anyone who wants to improve just anything, walking. I go for long walks. To improve anything, if you can put a little thing in your nose and it gives you over a third more oxygen into your lungs, and it costs you next to nothing to buy them. I don't see how I can't see how this company could go wrong. So, Michaela, I think you said you think about investing. Good move.
Okay, interesting, and certainly something which could. We know what a big market sleep apnea is, and the opportunity of that. ResMed's obviously done very well, but we know that there's a lot of non-compliance of masks. So people are certainly looking for something a little less invasive. Thanks for your call, Michaela. Our next caller's on the line. It's Ben from Brisbane. Good evening, Ben.
Good evening. Just a quick one for Les. I was just wondering if he's got any more info on CDB as to when they might be relisting at all.
Yeah, terrific. Thanks for your call, Ben. Les, CDB.
G'day, Ben. How you doing? Actually, it's a bit opportune. Condor came out with they haven't relisted yet. They're still suspended, although they're getting much, much closer to being unsuspended, because they're answering questions from the ASX. Once they've satisfied all those queries, they'll be back again, and I can't give you an exact date, but I know that because I went to them. They had a meeting recently, a general meeting, and they said they've answered most of the questions, so that each day they get a bit closer to answering and finally satisfying the ASX, and then they'll come back online. But the announcement that they made today was that and I've actually mentioned this before, is that, yes, there's been a lot of talk and a lot of news about Condor because this massive funding that they were going to get didn't happen, so therefore they couldn't partake of this coking coal project in South Africa. So that hasn't happened, so we move forward. Nothing has changed, though, because they still have the same assets they had before in Chile, which is an iron ore tailing project called Marianas. They've got a mine, Caracachampa, and they've got another one called Gold Iron. Now, those are still there, and the MD was just over in Chile just recently. He's just come back, and he was over there making sure that all the options and licences were paid up. So they're all paid up. They still have money in the bank. They are still liquid, and they are very close to making that particular Marianas project come good. It's a tailings project, so it's very easy to turn into profit, and it's worth millions and millions of dollars, right? Millions of dollars. It'll make them very cash flow positive very quick. So that will happen sooner rather than later. It's been dragging on for a while, but that'll happen sooner rather than later. So do I know exactly when they'll come back on? No, I don't. But what I would say to all you people out there who have invested in it, in the market we have a thing called fear and greed. If you all have fear and all jump out when it comes back on the market, the only thing that's going to happen is the stock is going to tank and you'll have a lot of unhappy shareholders. I would wait. The projects they had are still the same projects. Nothing's changed. They just haven't picked up the new project. Don't jump out, or well, I won't anyway. I wouldn't jump out as soon as it lists again because it'll go down quickly. Most people won't get out. The share price will tank and everyone will be grumpy. You don't want to be grumpy. What I'm saying is hold and let's see what happens because it still has the same good projects that it had before.
Okay, good one. Thanks very much for that, Les. We've got to go to a break in a second, but just one of the big demergers we've got through over the last few weeks was the Westfield Group one. I guess a question for both the panellists tonight. Westfield Group, Centre or neither? Which would you go for, Michael?
Look, I just think Westfield, I think the business model isn't going to work as well going forward. Yeah. So Westfield is not a business that I see long-term being quality. I think they charge too much rent. Retail is very tough. It's a good move, by Frank Lowy to reduce his shares, and I think it's definitely a stock in the long term to short.
Okay, interesting going the other way.
As a former shopping centre manager, not that I worked for Westfield, I worked for Lend-Lease, the opposition in those days, and probably still the opposition. I'm not interested in being an investor in shopping centres personally. Not that there's anything wrong with them, and you are dead right. We used to charge as much rent as we could get away with, and nothing's changed. But this thing that they did recently, they had a lot of unhappy people who thought they were being shafted, and I don't think that bodes well for going forward in the future. So I wouldn't be in either of them. And you're dead right, they do charge a lot. And the thing is, when things are going swimmingly, you can get away with charging a lot. But retail figures, just reported, are down, right? And everywhere you go, and I live in the city, so I see lots of shops. I work in the city, live in the city. Every shop has got 50%, 60%, 70% off. How are they making any money?
Yep. Only at somebody else's expense. But it's time for a quick break. We'll be having more questions after the break. 1300 30 34. Keep the calls coming or send us an email. yourmoney@skynews.com.au. Welcome back to Your Money, Your Call. It's the shares edition tonight and we're taking your calls. It's 1300 30 34 35 or yourmoney@skynews.com.au. So our next caller's on the line. It's Helen from Sydney. Good evening, Helen.
Good evening, gentlemen. This question is for Les, seeing he's into small stocks. He was mentioning at the beginning it's worth taking a risk sometimes. Yes. The Mirabella nickel has done a Lazarus on us and come back from the dead. Actually with a vengeance too. It's gone like from 1 cent to 33 cents. And you've got all sorts of funds jumping on board. Just now in the last couple of hours they made another announcement that another fund has jumped on board with 8% and so on. And they're actually producing. They've obviously got an asset. So what does Les think? Does he know any more? And is it worth taking a risk?
Good one. Okay, Helen.
Especially with nickel prices.
Yes, and Helen was just asking about nickel prices being strong, which they are one of the few commodities which has been performing well this year. So, Les, did you buy them yesterday ahead of today's jump?
No, if only. If only, as we used to say. Look, yes, I think it's definitely worth jumping on the bandwagon. What's very interesting and what I hear a lot of commentators talking about, mining's struggling and mining's dead, and it isn't as robust as it was. But we did some investor presentations yesterday, and my partner in crime, Barry Dawes, put up these charts where we were showing the inventory of nickel, copper, lead, and all those inventories are down really, really low, meaning that people have used up the inventories. That's why they haven't been buying. And now the inventories have been used up. They now have to start buying their nickel, their copper, their lead, etc., etc. And you can look at the LME charts, and this direct from the LME. The charts go, this is inventory where it was, and here's where it is now. And so things like that, people catch on to things like that, you know, that suddenly, oh, they're going to have to start buying nickel, we're going to have to start buying copper. And we talk about the iron ore price is dead. Well, we're still sending out record numbers of ships with iron ore. And if you look at the producers in India, in China, it keeps going, the production keeps going up. So what you hear and what is happening isn't necessarily always the same thing. So I think nickel, I'm in another nickel stock called Poseidon. Obviously picked the wrong one, didn't I, Alan? I picked the wrong one. Why didn't you ring me? But no, look, I don't follow Mirabella, but I do follow commodities, and I think that it wouldn't be a bad stock to be in, especially if you got in at a cent. It'd be a great stock to be in. Yeah.
45 years ago, Poseidon was all right.
Yeah, I know, and 45 years ago I wasn't trading. I know I look really, really old, but I wasn't actually trading then.
What about you, Michael? Mirabella, comments on that?
Look, I think, you know, the recent announcement's very positive, but then again, you know, a lot of the times these stocks have a rally, and that's factored into the market price. So you run the risk of should you buy more, or you know, 53% spike in one day is huge. So whether it carries that forward is another thing. So fundamentally, it's got no basis yet. It's very hard. Negative cash flows, hasn't made any money yet. So it's speculative. And,
so it really stays at a level below your filters, really?
It does, yes, yes. I mean, look, the return potential could be very high, but, you know, for us, you know, we look at the top 300, so anything... Do
you have any resource stocks in any decent ratings at the moment?
2.5 years ago, Regis was the stock I kept consistently recommending, and he went up, you know, about 56% live on air. But you know, since then we sold down off all our mining services and mining stocks. I mean, to operate in that sector in this environment, you've got to really specialise and know your stuff. So you know, unless you're very good at actually getting an insight into these companies, it's extremely hard. But then again, having said that, anything that involves a lot of risk gives you a high return.
Yep, good one, nice one. Thanks, Michael.
Good point.
Our next caller's on the line, Brian from Armidale. Good evening, Brian.
Good evening, gents. In the recent week, a couple of analysts on your station have indicated that they've got a certain degree of confidence in some mining services stocks. They feel that they've adjusted to the current downturns, and that provided their debt is not too great, that they feel that there might be a buying opportunity. Has the panel got any thoughts on that? And also on AVO, AOG, is there any bright prospects in relation to that company? Thanks.
Yeah, great. Thanks, Brian, for your question. And mining services, the prices have certainly adjusted down. Is now the time to be looking at some of them? Les?
Maybe. I mean, as we were chatting before, Boat Longyear always gets a mention when we're talking about mining services. And I was reading just recently that, you know, out of their rigs, one in 3 rigs is only operational. They've cut staff, but they've done that 1 million times. And the price is really, really very low. So, look, we believe, from where I come from, because we have a different mindset than, say Michael does where he comes from, because I've got a different trading, which doesn't mean that we're right and they're wrong. It just means we have a different paradigm, if you'll pardon the pun. We believe that the commodity, because they've been bashed around, are ready to explode. What I was just telling you about the amount of stock that's being held, very low. So people are going to need stock. So we believe things are going to go up. The commodities are going to really boom. Now, if the commodities boom, mining services companies are obviously going to go along for the ride, aren't they? Right now, it's a little bit of a risk if you go into them. But as we said before, or as you just said, the price is very low. Right, so, I mean, Boat Longyear is probably the lowest it's been for quite a while. It could have been lower, but it's very, very low. That just to pick one of them. I know there are many. So if you have an appetite for risk the way that we think, which is a little bit different than the way that Michael does his stuff, then I would say I always want to have my toe in the water. I'm never going to die wondering. I always want to have a little bit of whatever I can. And one day they'll kick some goals. But at this point I wouldn't go crazy just because I don't think you need to. So I would be a little bit invested for sure, but I wouldn't be massively invested.
Okay, great. Well, it's time for a short break. We'll be back in just a moment with more of your questions on shares. You're watching Your Money, Your Call. Welcome back to the program. I'm Jeremy Hook from TMS Capital, and you're watching the shares edition of Your Money, Your Call. With me is Les Sansa from Paradigm Securities and Michael Kodari from Kodari Securities. Our next caller is on the line. It's Ron. I'll ask you to wait a sec, Ron, though, because we're just going to go to Michael on mining services. Mining services, Les wasn't so keen at the moment, but maybe looking at opportunities that are coming up. Yourself, Michael?
Again, Jeremy, mining services at this stage is a sector that we've stepped away from. What we believe in our investment strategy is we look at the macroeconomics, we look at all the data that's coming out, jobless figures, GDP, interest rates, and based on that, we sort of look at the right sectors and businesses that are outperforming their competitors. That's how we invest. If you want to take a risk and get a high return, Les can help you. If you want to take less risk, get less of a return, but still be consistent, we can help you. It's all about your strategy. So mining services, at this stage, that sector doesn't fall into our investment criteria. We want to be consistent. And the reason why in the past 2 years in this show, every stock we've recommended for a buy and sell, we've had 100% strike on, is because of the way we invest. So, mining services, although they could be undervalued, but if you're swimming against the wave, you better be a good swimmer. And even if you are, it's very hard.
I like it. Thank you. Okay, Ron, thank you for waiting. Ron from Glenwood. Good evening to you, Ron. Ron. Later on. Okay, so Ron, just talking about overall, Les, we don't have Ron, but we've got a lot of stocks to look at. You've got a top 20. What's the most interesting stock and one that we haven't heard about tonight that you've got on that list?
I think Drill Search is one that we rate really, really highly. Got great prospects. LNG we've mentioned before. And Ron, who has gone somewhere, who wanted to talk about Silver Lake. Silver Lake happens to actually be in our super top 20 as well.
Okay.
Yeah, so we've spread it around. It's not just gold and it's not just silver. It's what's going to be really, really, really big is energy, especially liquefied natural gas, because sooner or later, we're going to work out ways that we can frack so that everyone's happy, and there is so much, especially in the Amadeus Basin, the Cooper Basin. Australia seems to be made up of 1 million basins. There is like millions and millions and millions and billions of cubic feet of natural or liquefied natural gas or natural gas, and that's really where we're going to pick companies like LNG, Santos, those sort of companies are going to really do it big, because with liquefied natural gas, what a lot of people don't know is that unlike the other gases, you can actually build these things very simply in any port to take delivery of it, because it's liquid. It just goes into these special tank things. And so you're going to find that all around the world there's going to be in a lot of ports, because people want the gas because it's cheaper than most other fuels, and because it's clean, and therefore they want to be able to use it. You'll find that they'll have these receptors, for want of a better word, built in the port, and then the tankers will just come in and offload them. So the oil and gas, not so much oil, but the energy sector, especially gas, oil to a lesser degree, is going to be very, very, very big. And so if you latch onto companies that are in that sector that have got great prospects, we can't see how you can fail but do good.
Thanks, Les. Michael, anything in that space?
Not much, no.
Woodside?
Woodside is a great company, so it's very hard to pick fundamentally sound stocks in that sector. Woodside is one of the quality ones, so if you want to...
And you were happy with the deal that they did to walk away from Leviathan and the deal to exit the Shell holding?
Oh, look, everyone's got their perspective. We still see it as a good opportunity in the oil and gas sector. Are we buying Woodside at this stage? No. We've sort of shifted away, but it's definitely one for the portfolio.
Thanks, Michael. That's great. Well, sadly, that's all we've got time for on Your Money, Your Call tonight. A big thank you to our guests, Les Sansa from Paradigm Securities and Michael Kodari from Kodari Securities. And to you, all our viewers, for your calls and emails. Always great to have a chat with you, and thanks for your questions. Until next time, I'm Jeremy Hook from TMS Capital. Thanks for watching.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.